The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. Good afternoon to some of our friends in the lower states in Australia, but it's good morning to many of you. We seem to have two different time frames going here, so we're never quite sure who's where. How's the volume, folks? Would somebody please type into the question box, show me that you're receiving the volume all right? No? 1, 2, 3, nobody. Speak. In the question box, let me know how the volume is, would you please? Okay, we don't have anyone doing that. Yes, we do. Norbert, of course, up in the far north of Canada. Good to have you with us, Norbert. Oh, David, across the ditch in New Zealand. I hope your trading's going well, mate. Mark, of course, a champion of the Danielcode, always here. So, lots to talk about, folks. Exciting times, isn't it? And somewhere along the line, we're going to be talking about the dangers of debt, what's coming up in the US. And I see the announcement just come out that the House of Representatives is set to debate and vote on President Biden's $1.75 trillion Build Back Better Act tonight. And that has come just a few hours after the Congressional Budget Office, which is supposed to be the independent scorekeeper for Congress, has found that it will add $350 billion to the budget deficit. Which is a bit of a contradiction with the White House's long-standing claim that the bill is paid for. I mean, the humor of some of the politicians' view on what paid fors are. Hello, Greg, over in California. Good to have you with us, mate. What the humor of some of American politicians' view of what paid for means is quite extreme. But anyway, the Congressional Budget Office has found that the estimate of the supposed additional $400 billion odd in tax that the government thinks it can collect from this legislation will fund it. And of course, Janet Yellen, the treasurer, ex-Fed governor, who should know better, has come out with a particularly salient aspect of the revenue raised by the legislation is a historic investment in the IRS to crack down on high earners who avoid paying the taxes that they owe, which Treasury estimates would generate at least $400 billion in additional revenue. Well, good luck with that. The history of humanity has shown that the guys with the biggest checkbooks can pretty well organize their tax, particularly under the US legislation. So we'll see, but I think it's a real problem. So let's move on. We have a whole lot to talk about today, and let's get this show on the road. Okay, here we are. So you know that markets are rational, orderly, sometimes predictable. They are, at least with the Danielcode. Well, the invitation for today, I really invited an avalanche. You'll recall I asked you to let me know about your worst trades, and I'd be happy to tell you what the issue was and see if I could assist you with your trading. So I literally got an avalanche of questions and comments about that, but mainly almost exclusively from people who are not Danielcode members. So I guess that shows us that I had three questions from Danielcode clients, members. So obviously they're fairly well organized, but they all had the same issue. They all had a lot of pain. A lot of these people, it's really sad because a lot of these people are really, really in love with trading. They love the concept. They love the precision of it, but they make a bit of money and they lose that money. It just goes on and on and on. And they essentially all had the same issues. They didn't know there was a Danielcode trade signal that most of us, I say, are not Danielcode members, and because of that, they didn't know the failure flip point either. And I've talked to you in the last couple of webinars about failure points and what they are asking you to do, and I'm going to change the language of that from failure point to flip point, because where we have a determined Danielcode trade signal, they're so strong that if you get a failure, it's a sign that you're wrong, and you should be the other way. So that's we're calling that the flip point, and I'm working to see if we can introduce that for you so that we create those. A lot of people are missing those trades. And essentially what they are is either outside bars or equivalent of an outside bar over 2 or 3 days. And they become continuation points. Very important that you're aware of that. And there's nothing in the website that points that out to you, although I've talked to you in these webinars about it often. So I'll be talking to Terry to see if we can incorporate something into the TO3 plus signals, or the somewhere on the website for you anyway. So these were their issues. They didn't know there was a trade, so they didn't know what the failure point was. They couldn't determine the probable trend from daily charts. They didn't understand risk management. They had no personal discipline, therefore no trading system. It was sort of have a different shot every day. And they tried to top tick their trades. It's really interesting. I actually had a Danielcode client who's done a tutorial, but has been away from markets for a while, talking to her during the week. And her comment was, as we were going through some of the Danielcode time signals, was, look at how much I left on the table. And a whole lot of people said that as well. People who are having trouble with their trading, they're trying to find the top tick. Well, at the Danielcode at least, well, let me start by saying, if you can find the top tick with any consistency, good luck to you. But in the Danielcode at least, your profitability depends on a progression of trades, or with the same basic risk, I should say. And the risk varies on the size of the bar, but you've got the overwhelming caveat to be very careful if the risk on any entry is greater than 1 ATR, which is your average true range, because it's that progression of similar, not equal, but similar risks that allows the profits to flow. If you're getting to the stage that you're putting on trades that have 2 or 3 times the average risk, and that turns out to be a loser, you've wiped out not just the profit, potential profit on that trade, but the profit on 2 or 3 other trades as well. So that was a common theme. But basically, variations on a theme, they didn't know trading, and they're suffering pain. And pain is what this is about today. And all traders have suffered pain. I suffer pain. Nobody hates a losing trade more than I do. But if you know how to trade, you've got that risk under control. And once you've got that risk under control in a systemic way, then all of that anxiety leaves you and you become quite relaxed about your trading. So the best analgesic for your pain, if you're a trader who's having pain, you want to be pain-free. That's the driving momentum. And the price for being wrong is pain, but pain drives you to be better. So it's also always a scope for improvement. Let's have a look at this issue that came up at the end of October. And Bloomberg and Zero Hedge highlighted it all as a wrong way bet. And that expression is pretty apt. But what this is about is some very, very big asset managers had massive losses, and some of them are being liquidated. And it all comes from the trade they were in, and the leverage that's on. So asset managers, hedge funds, they don't trade the way we trade. They're not trading one-day bars. They've got a much longer time frame. But their risk management sometimes is going to depend on one-day bars. And as they don't know much about the sort of trading we do, they miss those signals. So this is an extract from Zero Hedge. It's quite technical, and I don't want you to be too involved with it, and certainly don't struggle to understand the minute detail. They're talking about a whole lot of technical issues, but there's some real basic stuff in here that you do need to know. And it's the level of leverage that a lot of these asset managers, hedge funds, are employing. And looking at most of this is from Bloomberg. The most heavily leveraged multi-strategy, that stands for funds in the world, they're taking something like 20 to 30 billion in net assets and levering it up to 200 billion. I mean, it's hard to even think about it, isn't it? But the real scandal of this whole thing is they're achieving that said leverage using repo. And repo comes from the Federal Reserve, essentially. So it's, believe it or not, it's your money. Governments don't themselves create profits, and the reinvestment of profits is what investing is all about. And the Federal Reserve has the power to create massive amounts of new money, if you like, because it's a fiat currency. But this whole the repo crisis that happened in previous years has showed the Fed will always bail out the super large hedge funds. And they're talking about Citadel here for a slightly different reason. But what individual firms borrow is a closely guarded metric. This is from Bloomberg. And of course, it changes day to day depending on market conditions. But Bloomberg reports that some funds are levered up to as much as 50 times their own wages. Leveraged funds exposed to the basis strategy could be as much as 650 billion. So the basis strategy is a emerging strategy. It's a view that very, very big investors take. Somebody comes up with an idea, they've noticed a pattern in the markets, they think it's going to continue, or less really, they think it's going to reverse. And the higher rate expectations rise, the more dislocated the cash futures and ARB gets. That's the arbitrage. The more hedge funds pile into the same trades, which by definition soak up market liquidity and become ticking time bombs. Should there be a violent, sudden reversal in markets. And this is what happened in the week of 31st October. And it wasn't by accident. It's interesting that in the same way as the vast majority of hedge funds are following the same strategy, and in some cases coordinating that strategy, which is illegal, but there are all sorts of things that happen in markets, aren't there? Have a look what's been happening with the central banks. And this isn't by accident. On, I think, the 31st of October, I might be a day or two out, Australia, the Australian Reserve Bank, that's been standing in the market buying government bonds at a declared rate, decided not to bid on the new bond issue that day, which was the April 2024 government bond. And because they didn't bid on it, the interest rate went, relatively speaking, through the roof. I mean, we're talking about official rates here, and these things are magnified. They look sort of super scary on charts, but they're telling you the truth, but the magnitude of it's slightly different. But this didn't happen by accident. The day before, Canada, the central bank in Canada, decided to abandon QE, or their version of QE. The next day, Australia Reserve Bank fails to stand in the market for a new bond issue. And then it went on, and it just cascaded through country after country. Now, none of that is so exciting at the moment, but it set a totally different tone to the market. The market tone now is that interest rates will rise, and they'll rise sooner rather than later. And that's causing some angst. But it's the fact that these trades are so correlated. Commentators often talk about the hedge fund hotel. And basically what that means is most of these market strategies, particularly what they call the basic strategies, are promulgated. There's an investment bank or a particular analyst who's come up with these strategies, and they sell the strategies for a whole lot of money. And that means that the majority of players, the big players, they're in the same positional trade. And it comes originally from the song, Hotel California. I've called it Hedge Fund California. That's what they're talking about. Basically, you can check in any time, but you can't get out. And that's what the risk on these issues, that all of these trades, they're hypothecated, meaning that nobody's quite sure where all these assets are and who's got charges over them. And we know from past experience, the reality is a number of different parties will have charges over the same assets. But they're trying to do the same thing at the same time. Well, this was an issue that hit the major players very hard, but it hasn't really seen the light of day. Bloomberg occasionally talk about these things, but try not to, because, of course, their income is coming from a whole lot of these guys. They don't want to print anything that's too detrimental to them. But Zero Hedge, you'll find, if you don't read it, you should. It gives you a good laugh. They're pretty open to revealing a whole lot of stuff that the public generally doesn't see. And this involved, the end of this was that two of the very big funds, Rokos and Alphadyne, got absolutely whacked, and massive losses, as it says here. Well, they were, and all sorts of ancillaries from it. But one of these major commentators said, when you have a book that is wounded, they need to sell liquid assets. When you don't allow business cycles to function and you don't allow price discovery in capitalism for long periods of time, and then academics who don't understand anything about risk all of a sudden unleash price discovery too fast, they destroy things. And that is what's happening. But the reality is that the risk management, really, there are regulators who are supposed to be looking after these things, and they seem to be not doing a very good job on a whole lot of these issues. So Alphadyne, a huge asset manager, 12 billion macro trading strategy, and they've had a series of bad bets. In July this year, they lost about 10% in one leveraged trade, and their loss is the largest to be publicly revealed among macro hedge funds. Are particularly surprising because its strategy has never had a down year since it started in 2006. Pretty interesting, isn't it? But the losses show how even the most plugged-in investors were caught flat-footed by the sharp rally in US Treasuries over the past 4 months. Amid some of the highest US inflation readings in decades, interest rates have declined, perplexing bond traders across the world. I've highlighted that stuff there, and it's not quite right, but you'll get the gist of it when I show you what's happened on a chart, and it's quite extraordinary. First of all, this strategy was not based on US Treasuries; they were an incidental part of it. They were based on gilt British bonds. British government securities were the main part of the strategy, but it involved hedging in all sorts of other market players, including futures in US Treasuries. And this is what happened. This last bar on the chart you can see is, I think that's the 31st of October, 21st of October, do forgive me. I'm out by a week or more. And that's really interesting because this is the actual members chart, which was dated October the 21st this year. And you can see that the last bar, which is the bar for 10/20, Wednesday, October the 20th, that bar sitting right at the blue line, at the Danielcode blue line. How accurate was that? Well, that low is 157 caret 18 with the blue line to 157 caret 17. That little arrowhead formation you can see there is called a caret. One tick off, perfect target recognition. So it's that target recognition that sets up the TO3 buy signal, amongst other things. So the next day, the low, this was on the Thursday, the low was 157 caret 07. In other words, well below the Danielcode black line at 157 caret 14. This is the actual chart from that week of trading. Now, that raises a real quandary because the Danielcode black line has a number of qualities that are different to other support and resistance levels. Basically, if you get a close the other side of the black Danielcode black line, the close is the other side of it, it raises a very high percentage assumption, somewhere in the 90%, that the swing will be taken out. In other words, the very next day, this market closed at 157 caret 8, in other words, well below the Danielcode black line, which raised the assumption historically that the swing would be taken out, and that swing was sitting there at 157 caret 3. But at the same time, we had a TO3 buy signal. And the TO3 buy signal was set up because, to start with, this almost perfect one tick, for goodness sake, variance from the Danielcode blue line. So if you knew that, or you knew about the Danielcode, then you had a TO3 buy signal there. So let's have a look what's happened. I've taken in some of the other price movement that happened, and it's really, really interesting. This has got the line on it saying 157.17 as being the blue line support. And that was of course, the same number you saw on the previous chart I showed you, which was the actual members chart. You can see there where it stopped at the 157 caret 17. And as we move on, I've shown you the rest of the stuff that happened. But that little rally, the market didn't take out the swing low, which was expected. And this basic strategy that these big players were following required it to take out that swing low and keep going, and it didn't. And within a very few days, you had the rally. Then you had the nasty consolidation piece, which I've got in the circle here. And you can see there was an outside bar in there. We got long and short and churned about. But on the outside bar, our assumption on an outside bar is that it is a trend indicator. By and large, historically, outside bars tend to be trend indicators, but they can also be exhaustion moves. So we got short on that, and then we got whiplash to go long the next day when the failure point, or the flip point as we're going to start calling it, was taken out, and you had to be long. So we had a big rally up, and on the biggest bar up, it was valid to exit, which is why I'm showing our exit at the close of that bar. And if you didn't get that, you got another leg up, and then the sell signal was a bit worse than taking the valid to exit. But why would such a small move, really, if you look at the first 3 days of this move out from the TO3 buy signal, which came it was created on October 21st, why was that little move so aggravating to this strategy, involving in billions and billions of dollars of losses to these guys? Well, it's leverage. It's the two things. It's the herding, which I talked about at our last webinar, that these big players tend to be getting their advice from the same source. Many of them have the same advice, and they're following the same strategy. That's issue one. Issue two is almost no one except the Danielcode saw the buy signal that came from the blue line target recognition at 157.17, which for us, the actual low was 157.18. 57 caret 18, 1 tick variance. And that buy signal set off a firestorm. You haven't heard a whole lot about it. These sorts of things are happening in markets often. And usually, as I say, the major publications don't want to tell you about it because they're getting a whole lot of their income from being supported with advertising revenue and what have you from the very same players or parts thereof. Anyway, so they're not the only ones. 3 months or so ago, I told you inflation at domestic level was running. I said at 14%. That was my calculation back a couple of months ago. And of course, my calculations for inflation are different from the official ones. Mine include things like food, which are excluded from many of the, and energy, which are excluded from the Australian CPI inflation figures because they're too volatile. I think that's ridiculous. Only an economist could say that. But I actually put a post up on the Danielcode website saying I read 7 newspapers and websites daily the day after those comments I made, which were made at one of these Danielcode webinars. There were no less than 5 major publications covering inflation. No one had been talking about inflation for years and years and years. And soon after, we got the US Fed saying inflation is transitory. And I mean, this is the sort of thing we heard from Bernanke in 2008. Subprime issues are contained. 2000, I've got 2018 with 2008. Do excuse me. I'll plead the usual excuse. I do these webinars for you starting from about 4 o'clock in the morning, and sometimes I just haven't had enough coffee to get the brain cells firing. So obviously I was talking about 2008. And they never mention hypothecation. Hypothecation is a huge issue in all securities trading because there's limited insight into how often these assets are pledged. A whole lot of these assets have different requirements, reporting requirements. Some have no reporting requirements at all about how these assets are pledged. And you'll often have direct securities over direct security by way of a charge or a lien over some particular security, but there's a different lien over the whole of the asset class for that particular vendor. And it's very dangerous. And when these big events happen, sometimes it takes a while to sort them out. But the default position for market regulators is always denial. That's what they do. That's what they talk about. So why is rampant inflation no surprise? I mean, basically all politicians have the same skill set, the most common of which is they're very good at spending other people's money. And the idea is they're doing it for your benefit as a taxpayer, which is not always right. But there's always a history behind major economic events, and I suspect this outbreak of inflation is much more serious than people will admit at the moment, and it certainly has a long history. Remember that debt is controlled by the US Congress. It has to periodically set the debt ceiling, and often enough there's an argument about it. But the best argument, or it's the most specious argument, but it's the one usually trotted out, is, oh, we're not going to default on our debt, says the party seeking to raise the debt, and really all we're doing is we're authorising an increase in debt to cover the commitment which we've already made. That is just insidious, is a gentle word, much better than saying corruption of the whole concept of government. Governments act in the same way as, or should act in the same way as you do to look after your household budget or your business budget. You don't incur the debt until you know that you have the income to pay it. Well, of course, countries work on a different basis. They're free to increase debt massively, and it'll be on the never, never, as we say. When's this going to be paid? On the never, never. Well, what and where is the never, never? The never, never is an Australian Aboriginal expression for the outback, for land way beyond human occupation. It's the never, never. and all sorts of wonderful things happen in the Never Never. And governments seem to believe that their income will also come from the Never Never, because they persist in spending massive amounts of money, all of which essentially at the end of the day is taxpayers' money. The old argument is it has to be paid back sometime. That may not be true in fiat financial systems on the normal span of human life, but it's undoubtedly true on the Never Never. So, how did this happen in America? I mean, the vast majority of my clients are in America or Canada. By vast majority, I mean 95% or more. And I thought I knew America and knew Americans. And what's happening in America with this Biden setup is it's amazing. I mean, the whole issues from defund the police to let's open the borders. I mean, it's dishonest, but it's also dangerous. And as I say, they're not. Biden's not the first person to be a big spender. Obama doubled the total U.S. debt in 8 years. Trump tried to do his best over in his 4 years to spend as much as possible. But the Biden administration's taken government spending to a whole new level. And when you have Bernie Sanders as chairman of a vital Senate committee, would you believe it's the Committee on the Budget, the Senate Committee on the Budget? This is the committee that sets the budget. You should know you're in trouble. And this bill that's being voted on tonight, starts getting voted on tonight, the BBB, the Build Back Better Act from Bernie, originally came from Bernie and AOC and a few others. And I mean, don't forget that behind the scenes of the people we see, there are hundreds, thousands of people working on their interests. And as soon as the last election looked to be favorable to the Democrats, and it was purely because Trump had made himself so unpopular, there's a significant portion of people who couldn't continue to accept his behavior. Thousands of people started working on this, what eventually came to be known as the Green New Deal from AOC and her cohorts. And I mean, it's total rubbish. It's like children being invited to write out the list of what you want. And all of you find that the first 10 lines are, I want lollies. I mean, it's ridiculous. But that's what's happening in America. And of course, what happens in America affects all of us. So this is the scary part of politics. The USA matters to all of us because the US economy is so huge that it affects all of us. Everyone's affected. And hypothecation, this is the hidden scourge of trading in securities, where there's unknown, or there are more than one liability on an asset, or it's pledged to different people at the same time. But in the same way that hypothecation causes confusion in politics, in securities law, it can cause confusion in politics. So if you wonder how you got to be in this position as an American, the Biden conspiracy, you voted for Obama's candidate. And that's how Bernie Sanders finished up in a position. It has gone from being regarded as a harmless old crackpot to head of the US government's budget committee. I mean, it's extraordinary stuff. And recall briefly that when the primary started for this last US election, Biden wasn't even getting in the first three places. He wasn't 1, 2, or 3. It was all Mayor Pete and Bernie and sometime Elizabeth Warren. The two people who were not getting any votes, or so marginal you were in the 1%, 2% range, were Biden and your new lady vice president, Kamala. But then at some stage after the South California primary, it became apparent that Biden was the only candidate who could harness the black vote, the coloured vote, which has been the backbone of and the bedrock of democratic politics for a long, long time. But think about what's happening now with this Build Back Better legislation. It is absolutely massive. It started from Bernie Sanders at $6 trillion. Then it dropped to $4 trillion. Then Manchin had some brains to say, I'm not going to support that. It's ridiculous in this environment. And now it's down to $2 trillion thereabout, depends how you cost it all, probably a whole lot more. But a majority of Democrat politicians in the House of Representatives were prepared to support the BBB legislation before it had been written. And certainly before it was costed. The costings only started coming out today. And 49 Democratic senators, the supposed serious people in government, they agreed. I mean, how can you agree to a bill with those financial consequences without knowing what's in it and without knowing the real economics? What's the income? What's the expenditure? What are the go-fors? The pay-fors, as they're called. and it's ridiculous. And, of course, a lot of it relies on that statement from I think it was a Norwegian scientist at one stage. He said, forecasting is difficult, especially of the future. And he's quite right. And the go-to solution for economists, politicians, and government is it's in the future. This will work out. The current one is if we appoint a whole host of new tax collectors, they can raise the additional go-forwards from taxing the rich. Why is it now just taxing the rich? What's wrong with the long-established progressive taxation system? Well, Biden's promised there'll be no new taxes if you earn $400,000 or less. That takes a whole lot of people out of play. Politically, the Democratic Party doesn't want to be seen to raise taxes, but they have to raise taxes. Someone's got to pay for this, and it can't just be on the never. But that's what it will be. But they've now reached a stage where they're prepared to say we're only going to tax the rich, and we're going to put on hundreds of millions of dollars we're spending on employing new staff, training new staff. The government will get that money from the people who've been avoiding paying their fair share. So it's sort of mixing the it's a message for the lowest common denominator. I'm not taxing you, I'm only taxing the very rich. Well, the very rich are precisely the people that have the most resources and the most sophistication. So I want to bet against that, but we'll see, and I know it won't be good. But are these people economists or witch doctors? This is from a guy called Stephen Ratner, who some of you may remember. He was an economic advisor to Obama. And he came out with this statement last week. Enough already about transitory inflation, Ratner wrote for the New York Times. Last Wednesday's terrible consumer price index news shifts our inflation prospects strongly into the embedded category. You think? I mean, that's the thing about inflation. Once it bites, it gets its teeth into it. History has shown that it's very, very difficult to get rid of. And now inflation in the US has surged to its highest point in 31 years. So prices this October are up 6.2% over last October and raised nearly 1% in the month alone. And I mean, how come none of this is going through the heads of your rulers? They're my indirect rulers, because what happens in the United States, particularly anything financial, washes off on all of us, including Australia and New Zealand. And Ratner's question, how could an administration loaded with savvy political and economic hands have gotten this critical issue so wrong? They can't say they weren't warned, but I don't think they're listening. In fact, I think the proof is in the pudding that they're not listening. And Ratner claims, excuse me, the original sin was the $1.9 trillion American Rescue Plan, which directly pumped stimulus money into the demand side of the economy and was not paid for. That's the sin, that all of these spendings, lashings of enormous amounts of money are not paid for. And the same thing's happening with the vote tonight, which starts on the BBB bill. It is not paid for. Even Manchin has come out and said, and he's a Democrat senator, said, it's only paid for if you accept the budget gimmicks and the sleight of hand. In other words, we've said this will be a 10-year program. Let's cut it in half. It's now only 5 years, so it's only going to cost half the money. But of course, history shows that all government programs have a life of their own. They don't ever go away. They just get bigger and bigger. And the whole of the Democrat push for this is, let's put in so much stuff that's really, really popular with the people. Why is it popular with the people? Because they think it's free. I can remember in Houston many years ago, I was at a cocktail party, mainly men, business folks, and there was one charming young lady there. She was a very petite, very attractive lass with a very broad Texas accent. And she said, you guys think what's the worst word in the English language beginning with F. So everyone sort of nodded and said, yeah, we know that one. She said, it's free. The worst four-letter word in the English language beginning with F is free. And she was talking about something different, but she was absolutely spot on. If you market this stuff as free, in other words, the whole of the Democratic wrap-up is this massive, unbelievable, unheard of cost being added onto an already unheard of increase in national debt. If they say it's fully paid for, it won't cost you a penny. I mean, blatant lies, so what? Doesn't matter. They're only selling to their own base, aren't they? So there's the question, Ratner's question. How could an administration loaded with savvy political and economic hands have gotten this critical issue so wrong? And the answer is they don't care. They really don't care. The politics says, pass this stuff, it's going to be immensely with all the people who think they're getting a massive benefit for free. And keep telling them it's fully funded, so as far as they're concerned, it's free. Keep pushing that narrative, enough of them will believe it. In fact, people will believe it because they want to believe it. Okay, it's that old question, getting someone to change their mind when their salary depends on having that particular view is very, very difficult. So he goes on, and you can just read through this as you're going. But the Committee for Responsible Budget estimates that if the Bell's temporary increased policies were made permanent, its true cost would be $4.9 trillion. It would increase deficits by $800 billion over 5 years. Extraordinary, isn't it? Just mind-boggling. And Ratner goes on to say the infrastructure bill signed by Biden on Monday will not be fully paid for. It includes $550 billion in new spending, with offsets of only $173 billion in savings. So he goes on to say, given the importance of Biden's spending initiatives, the right move would be to add significant revenue sources. Yes, that means tax increases, Ratner argues. We can't get money that is badly spent, but we can build this economic plan back better. Ratner also laid blame on the Federal Reserve, which he said is being too slow to taper off its buying of debt and sending more money to chase few goods. Of course, the Federal Reserve is captive to the major banks, who are its shareholders, in fact, and its directors. And you can read a whole lot more about that. But regulatory capture shrieks from the masthead of the US Federal Reserve, and I would suggest most central banks as well. So let's move on to the other wrong way bets that have been of great importance during the last fortnight. Fortnight, of course, is 2 weeks. 14 nights, it's 2 weeks. It's an Australian expression, sometimes a British expression, not used much in America. but that's what it means. So um, what we've had is this incredible boondoggle's the only word for it in Glasgow on the latest climate change conference, which I think is called COP26. Glasgow in northern England. A strange thing happens to the British whenever the royal family are involved. Less so in Scotland. Sorry, I should correct myself. Glasgow is in Scotland. It's the capital of Scotland. A whole lot of otherwise sensible folks get really weak-kneed, politicians in particular. And of course, Prince Charles, who's the heir to the throne, is an outstanding reason for ditching the monarchy, and he's a lifelong tree hugger and a most strange character. And of course, it's been his pet issue. He's been very consistent, I'd say, been talking about climate change and the risks of it before anyone else. He's been on that issue as an environmentalist for almost all his life. But Greta, if you've managed to avoid reading about Greta, you've done well. Greta and the main climate change narrative is run by the United Nations. Much of it is manufactured. So United Nations was, when it was founded, a very, very worthwhile objective to put competitors in the same room and have a forum for discussion. But they've taken on a life of their own. They get so much money, they've got to spend it on something, and they run all sorts of programs, some of which are worthwhile, others of which you've got to scratch your head. Now, you think about this whole climate change narrative. It's been going on for years and years and years, and various journalists have adopted it. It's a bit like all the major political issues, in the same way that Trump was hated by some media and adored by other media. People have different views and they split on these issues. But how this whole Greta thing, Greta's a young lady, I think she might be 17 or 18 now, but she jumped on the stage a few years ago as an outspoken spokesman for the damage that mankind is doing to the planet. But first we heard of her internationally is she was on a yacht, not using any petrol, a big yacht, sail-driven, manned by a team of professional sailors, heading from the continent to the US. And she was going to New York to talk at the United Nations head of a government meeting. So you don't just get an invitation to go and address the United Nations if you're not at least a industry leader. In this case, it was the leaders of countries. Trump was there. All of the leaders took their turn in giving their address to the United Nations. But all of a sudden, Greta was on the agenda. So how would she get on the agenda? She was a young Swedish schoolgirl. Well, this whole thing is being run by the United Nations. It's manufactured by the United Nations. The COP26, the climate change meetings of the world's leaders and of all countries, in fact, is run by the United Nations. It's a United Nations run initiative. So they set the agenda and come up with things like you've got to phase out the use of coal. Even if you agree that climate change is caused by human activity, the solution can only ever be political. These are questions that require massive amounts of change and massive cost. And if you wonder why so many countries are so keen on attending the climate change conference in Glasgow, in Scotland, I don't want to offend anyone, the answer is that the other part of the equation that's really talked about was the promise from the Paris Accord 5 years ago. It should have been 4 years, but they missed a year because of the COVID pandemic, to fund $100 billion a year from developed countries to be given to developing countries to help them. The object was to help them adjust and prepare for climate change. In fact, what's come up at the latest conference in Glasgow is a demand that there be compensation for the damage done to the developing countries by climate change caused by the major emitters: China, Russia, India, United States, Britain, Australia, etc., and the European Union, of course. The costs of this amelioration, as I say, flow both ways. One of them, ways that excites the majority of smaller countries, is they are seeking compensation for the damage already done to them by the major emitters. It gets to the stage it becomes really stupid. One of the proposals that John Kerry came up with, I know it's hard to believe, but John Kerry is the United States Biden's, I should say, climate change czar. So he jets off to Glasgow in his private jet for this meeting, as do all the world's leaders and a whole lot of celebrities as well. What celebrities have to do with the issue is beyond me. They certainly could care less about whatever carbon emissions they make, and they're certainly not going to be paying for the demands of the developing countries. But nonetheless, Kerry jumped in his jet plane, private jet, off to Glasgow. And there were hundreds of them. Everyone arrived. Everyone who was anyone arrived by private jet. And, you know, I mean, one of the major sources of human-made carbon change is airlines. Massive amounts of carbon are created by airlines, obviously, with the huge fuel demands that they have. So Kerry's first idea was, we want to pledge that you're going to cut out methane emissions. Well, some countries like Australia, and even more so New Zealand, they have massive populations of cows. And one of the sources of methane emissions that they're charging, or they're trying to attack, are the gaseous emissions of cows. Apparently they're we know they're very normal. They've been going on since time immemorial. Most mammals exude a bit of gas occasionally, but apparently from cows, it's very high in methane. The amount of methane in the atmosphere is minuscule, absolutely minuscule. It's no more than a talking point. And that's what you're getting from John Kerry, which I'm surprised he even got as far as articulating that idea. And of course, it was very nice to see this statement from Tony Douglas, who's the CEO of Etihad, and big airline, a big Asian airline. And they offset Gulf carrier that is described as. The state-owned company offset 70,000 tons of carbon emissions for one Boeing 787 this year by buying into a forestry program in Tanzania. I mean, can you believe it? He says he calls it cheating. He said it's offsetting is cheating. It's a short-term stopgap if you haven't got a more sustainable alternative, but it's cheating. And there is no sustainable alternative at the moment. There may be in the future. It's this argument of the never. And Australia, let me tell you, has used that argument in a massive way in its presentation to the climate conference in Glasgow with carbon offsets by planting trees. For goodness sakes, was one of their main things. I suppose always planting trees is a good thing. Whether economically it's a sustainable idea for offsetting carbon. It's an easy solution, an available solution, as Mr. Douglas said. But he said, I think offsetting is cheating, and it is. He goes on to say, of course, it's all very well targeting airlines which we must, he said, but you need to balance the stick with the carrot with incentivization. In other words, give us some money. Well, not only will we assist in offsetting our carbon creation that comes from our aircraft, but we want you to pay us for it. You need to balance the stick with the carrot. All very predictable. The whole thing, as you can see, it's wonderfully moral. I get it. No doubt, the world would be a better place with less pollution. The problem is that the economics of getting rid of that pollution in some stages are just not feasible. At the moment, you can't get rid of them if you're flying aircraft. And there's a whole lot of other activities as well. One of which, a big one of which, of course, is coal. While the world is pushing electric cars, no one stops to think enough about where's this power to run them coming from. It's electricity. It doesn't come out of thin air. It requires energy of a different sort to create it. A huge part of that energy usage all over the world is coal. So, got to get rid of coal? Wonderful idea. What are we going to replace it with? None of this transfer to alternate sources of energy is going to happen until we have a source of energy that is competitive in price and in usability, if I could use such a word. Okay, let's keep going. And this is what we've been talking about. It's hard to change a man's mind when his salary depends on it. It's hard to change a government's policy when the economy of the whole country depends on it. Some of the biggest polluters, China, Russia, were not even represented at the conference. But decisions are universal. There has to be mutual. There's no enforcement mechanism for these climate change conferences. And decisions have to be unanimous. But you can't get there because the motives are not. There are countries, there's some small island communities that they believe their very existence depends on getting global warming, as they call it, down below 1.5 degrees and keeping it there. For them, survival is their motive. They certainly believe that's the motive. They believe that's the likely outcome if we don't get global warming down. Then there's a whole lot of other people who say the whole thing of the idea of global warming by human intervention is a hoax. So it's going to be very, very hard to see much progress, but there's an embedded cadre of journalists who push the issue and will always push the issue. So here we are. Now you get the witch doctor after we've had Obama's number one man saying that the Build Back Better Act is not funded. It's going to lead to a massive increase in debt. Now you get Summer. Here he is, Summers. What's Larry Summers, Clinton-era Treasury Secretary and Obama economic advisor, saying Democrats risk bringing Donald Trump back if they can't get inflation under control. It's going to be a lot worse than that. He goes on to say, if price stability is lost and inflation accelerates, which it has already, sooner or later the consequence will be a severe recession that will hit the poor and middle class hardest and undo recent employment gains. He argues that the Build Back Better plan would have only a minute impact on inflation because its spending is offset by revenue increases and measures such as childcare would allow parents to fill job vacancies. Summer also points out the Build Back Better bill would spend less than, over 10 years, less than all stimulus spent in 2021 alone. He's a well-known Democratic hack. I remember him so well from the Obama years. Here you have the issue. Two people, both previous Obama-era advisors, saying the direct opposite. Okay, let's move on. So we've had the witch doctor. That's why I call them witch doctors. But anyway, let's wrap this up. Politics everywhere is about smoke and mirrors. Australian climate change plan for the Glasgow confab was a masterpiece of hope over reality. Australia is a massive coal mining country, biggest natural gas supplier in the world, and it has lots of cows, as has New Zealand. Kerry thinks that methane, which is a tiny polluter, really is ridiculously low. It's low-hanging fruit. So he wants to have pledges to get rid of methane. Can't be done. I mean, the dairy industry in New Zealand is one of its biggest sectors. The whole economy depends on it. So stop worrying about all that stuff. Remember that trading of your futures and Forex is something you can control, as the closing price of markets is the ultimate truth. The closing price of markets is never wrong, folks. Pain is what rewards incompetence, but it also drives you to improve. So if you follow the Danielcode, you'll be pain-free. If you'd like to find out how, take your free trial today. You're most welcome. Okay, and the various programs we have at the Danielcode services, TO3, TO3 Plus, etc. You can start with those. They're wonderful. They're very, very good. The TO3 signals in the last week, extraordinary, aren't they? I mean, I put a post up that, I don't know, we had 24 signals, 16 were elected, 15 of them were profitable. Extraordinary stuff, and that's been going on. We've been doing this for years and years, so nothing's going to change. But Forex and futures, both, they trade identically. I know there's a whole lot of people say, oh, absolute rubbish. I have guys come to me and say, oh, I'm a Forex trader. I love Forex, but you only trade futures. Well, that's not right. Harold, thank you, my friend. So great to hear from you. I do trust and I pray that you're well, mate. It's great to hear from you. Harold from Redding, California is not the oldest, but one of our longest standing members. He's been with us forever. And I did a tutorial for Harold's group in Redding, California. He organized it all. And he was our host while we were there, and he was most gracious. And we had a wonderful time at Harold and his beautiful house there. Wonderful guy. Great to have you with us. Some of these people have been with us for a very, very long time. So remember, the industry's watchword is that the majority of new traders lose their first bank in the first year. I think that's rubbish. I think 99% of traders lose their first bank in the first month. So remember, there's actually an expression from it, your first bank. The implication is that's not going to do the job. You're not going to learn to trade till you've destroyed several of your banks. That's crazy stuff. Don't risk your bank. Get rid of the pain. Get rid of the anxiety. Follow the Danielcode, and you will always be on the right side of all the trades. So if you want to go past just using our services, which are TO3 Plus signals and what have you and more, then I will be happy to actually teach you to be a super trader. And you can do that with the Danielcode tutorials, which we're available to run those whenever you require it. Okay, so remember, folks, the business of trading futures and Forex is not to be right. The business of trading is the business of making money. And I invite you to start with your free trial of the Danielcode. Costs you nothing. Go to the website, www.thedanielcode.com. Start your free trial today. Just hit the register button. Any issues you have, contact Terry at support@thedanielcode.com, and he'll get you fixed up. Remember, too, folks, to read our disclaimer on risk. Trading is risky if you don't know what you're doing, and I promise you it's very easy to lose all your money very quickly if you don't know how to trade. I have not found that you can learn trading fully from websites, commentary, books, and other things. I made that same mistake myself. Being an attorney, I thought I could learn from books and some practical experience. That's the way you learn the law, with a few lectures thrown in, but it's not so. You need someone who knows what they're doing to teach you, and the best place is right here at the Danielcode. So thank you for being with us today, folks. Thanksgiving next week. Have a wonderful holiday, and I'll be thinking of you. Andre, can any of your systems be used for day trading? Absolutely, Andre. They all Danielcode trading will adapt to any time frame. I've used it to trade 3-minute charts. I mean, you can be as fast or as short as you like. It all works the same way. The principle doesn't change. The Danielcode is the universal code of trading, price and time. So take a free trial, and happy to help you guys in any way. So enjoy your Thanksgiving, thinking of you, and I'll look forward to talking to you again in a fortnight's time. Anything you need in the meantime, any particular matter you're interested in, please shoot me an email, jneedham@thedanielcode.com, and I'll be happy to cover it at our next public webinar. All the best for now, and enjoy your weekend. Bye-bye for now.